So Anthropic, one thing that's confusing me, in like a week, they announced the big fundraise and then they announced the confidential IPO. Why not announce these at the same time?
This is very normal. This is super normal to do one last big fundraise to get your anchor investors for your IPO. So if you look at like SpaceX, the round that they did prior, those are going to be the companies who are going to get in at a great stake. And what you're doing is you're essentially giving them like a discount because the business isn't going to fundamentally change all that much. I say that now, but Anthropic didn't they add like, remember when they added like $20 billion in like a month? So this is probably the only business that could change fundamentally that much. But what you usually figure is within the, let's say 4 to 6 months leading up to the IPO, you're probably underwriting the same base case in that company. So what this is kind of like a hat tip to the companies who are going to sign on and take on those bigger blocks of capital commitments that are going to have to go in, which allow you to start building the IPO book in a fashion that makes like life easier.
So all right, to just get this straight. So these are people that are coming in, they're doing a private investment, but they're also kind of committing to a public investment.
Yeah, I have no doubt in the world that they had to commit to also buying in at some price down the road. But like, let's just round up to $1 trillion here. Let's say they're coming in at $1 trillion and then they IPO at 1.5. They're getting the benefit of like a 50% like increase to IRR like on day one, which is pretty nuts. But they're committing incredible swaths of capital in order to do it. And that's another reason why I think that this was somewhat of a muted number. I can't believe I'm saying that about 965 billion. But it's because you're giving these guys a leg up to get in before the IPO.
Yeah, so they're getting some sort of incentive here, which in some ways makes sense, but in other ways, like the numbers are just so massive. It's all kind of it's all bonkers to me. But this is why they maybe didn't want to even go for that $1 trillion valuation.
Right.
So who led that round? Who were the key players here?
Dragoneer and Altimeter were two of the largest ones. And those are crossover funds. A crossover fund means that your LPs give you permission in the funding docs to invest in both private and public companies. And so what they're doing is they're coming in before a company goes public. They invest in companies that are like past the, what you would call growth stage and are now later stage, but still growing well. Like many of these investors who are on this cover or just did that round were also in the likes of like a Snowflake before they went public. They'll probably be in the likes of a Databricks. So they are not the mutual funds of the world like a T. Rowe Price or a Wellington, but they're one step before and have the flexibility to do both private and public investments.
They're funds that have big pools of capital available. They like late stage private investments. They can also stay with companies in the public markets. They're probably registered investment advisors, if I had to guess, based on this, which most VCs are not registered investment advisors to invest in sort of private early stage companies. You don't need to be. Once you want to do things like a lot of secondary deals, more public market investing, by registering, you do have a lot more requirements and it's a lot more compliance work for your team, but it gives you a lot more flexibility of how you can deploy capital.
Yeah, I'm glad you brought that up because even if like something looks super attractive to an early stage investor, they may not be able to go and invest in that.
Yeah, we had limits in how much of the fund we could invest in different areas like secondaries until we made that change. But I have to say, from a marketer's perspective, the change to being an IRA is so painful. I feel like marketing got hit among the hardest of all the teams.
Just to go on a quick tangent there, why? So you can't market yourself anymore?
So you can market yourself, but like your team goes on a podcast and talks about how great your firm is or your returns or anything like that. You also have to disclose that as an advertisement to the SEC. Everything you do that has a public statement, you have to be monitoring. You have to get out ahead of it. You have to be careful of what you say because if anyone on your team says something that's untrue or could be misperceived as like an ad for capital, there's a lot of potential scrutiny on that. This is years ago now, but my interpretation was we didn't change that much of what we did. We just had to be way more compliant around keeping track of it all and getting ahead of it.
Okay, I get it. What should we hit on next here on this one?
Well, so one thing that's confusing, so Altimeter, they're one of the headlines. I think they were the first ones mentioned in the press release, which to me usually means you have to put in the most money if you're going to be the first in the announcement.
Oh, I thought you were gonna say that means they're alphabetical because it's A.
Actually, that's the other interpretation. That could be. I was going to say that's normally the firm that puts in the most money. They want to be the first author, essentially. But it's possible it's
Yeah.
alphabetical. Now, their AUM is only $20 billion. And I say only. That's a big AUM, but that's actually like peanuts relative to the size of this round and how much capital Anthropic needs. How does that work?
Well, there's a good chance that they took a bite of it in one fund and then maybe another fund and then also raised an SPV. So it's special purpose vehicle. And what these larger hedge funds will do is they'll go back out to LPs and be like, hey, we we got a chance to get back into Anthropic again. Do you want to give us more money? And at that point, people are like, oh, you have access to that? Nobody else can get access. And you can raise this side pocket fund. So if you're like, if you're not a CFO, you may not realize that you may raise from like Andreessen Horowitz, but on the cap table, it's like 4 different funds from Andreessen Horowitz and also an SPV. So these can take different forms. And even if the AUM is one number, it doesn't mean they may not opportunistically go out and try to gather up some more cash.
When I went all in on my newsletter Growth Unhinged last year, I quickly decided it was time to make the switch to Beehive. I chose Beehive because they're serious about powering the internet's best newsletters. Beehive's all-in-one platform brings together newsletters, websites, and every tool you need to grow and earn. And they keep making it better. You can now launch, host, and monetize your podcast entirely on Beehive. You can host webinars on Beehive. And you can access Beehive through the new MCP. I just use Beehive's MCP in Claude Cowork to audit my site, prioritize SEO fixes, and analyze subscriber trends. It's my newest obsession. If you care about owning your audience, Beehive is a no-brainer. Try Beehive for free by going to beehive.com. That's BEEHIIV.com. Use Kyle30 for 30% off your first 3 months.